where today FANG is in focus. Big tech companies like Facebook and Amazon are losing some of their appeal on the street as more investors are pricing in slowing growth, climbing costs, and new concerns over increased government regulations. Most FANG stocks are actually trailing behind the S&P 500 so far this year, according to market data from FactSet. And joining us now on the phone with more reaction is Dan Ives, Wedbush Securities Managing Director of Equity Research. And Dan, you're out with a new note talking about the escalating tensions with China and how a tariff situation could potentially be a $20 to $25 stock overhang on shares of Apple. And how do you really calculate that? What's the big problem here for Apple?
Yeah, I mean, look, Apple's caught in the crossfire, and they've really become the poster child for the U.S.-China UFC trade battle. And when you look at the stock, $20, $25, it's really around trying to quantify what the cost impact potentially is to Cupertino in this battle that we're seeing between U.S. and China. And we think that when you look at what EPS impact could be relative to demand as well, it's about $20 to $25 impact.
But you maintained your outperform rating on the stock as well, even though it could be a $20 to $25 overhang. So how do you see this moving forward? I mean, did you keep that rating just because you think that these problems might actually not come to fruition here, or what's your thinking around that?
Yeah, I think right now, I still think the bark's worse than the bite in terms of ultimately how it's going to impact this cycle, especially coming to September. And in our fundamental view, long-term standing bull thesis on Apple is unchanged. And when I look at the next 12 to 18 months, there's 350 million iPhones in upgrade for an opportunity where Apple could go after them on this next cycle. 350 million iPhones. You know, we think we look at China, 60 to 70 million iPhones are coming up for an upgrade there. And I think I look at numbers today, I think this is going to be an unprecedented opportunity for Apple over the next 2 years, especially with 5G on the tail end of it.
Hey, Dan, Brian Chung here. So when we talk about the China market, obviously a big focal point for Apple, we're also worried about whether or not the current trade tensions are just allowing Huawei, the domestic phone maker, to basically take more market share in that market. Is that something that's baked into your projections for Apple? Is that a serious concern? Or is the assumption that at some point there will be a trade resolution and Apple can get right back to where it started from?
Yeah, I mean, it's a good point because no doubt they see it on the supply chain as well as on the demand side. Because 20% of iPhones we're predicting will be coming out of China over the next 12 to 18 months. When you look at Huawei, the nationalist sort of worries out there, if anything, we've seen a slight tick up in demand in China over the last 6 to 8 weeks. And I think that bodes well going into this next iPhone cycle, where we think, you know, based on our Asia checks, there's about 75 million to 80 million units that Apple's expecting for this new product cycle. If I go back a year ago, that's pretty much in line. So it just shows, despite all the worries, many yelling fire in a crowded theater, demand, at least the tea leaves, look pretty positive going into this next cycle.
All right, so that's the plus side there, but you touched on the supply chain, and as we continue to talk about the U.S.-China trade conflicts there, I mean, how hard would it be for Apple to potentially move some of that supply chain, at least outside of China, as we continue to see problems on that front?
I mean, ultimately, we view it as more or less impossible for Apple to take more than 10% of production outside of China in the next 12 to 18 months. And we've said best case, 5 to 7% production could go to a Vietnam or India. Mm-hmm. And that's why right now they're kind of caught in the crossfire. And that continues to be the biggest worry, is that, you know, what that could ultimately do and disruption of the supply chain. That obviously affects semi-stocks as well. And that's why right now, you know, this is definitely a white knuckle period for tech investors in both Apple as well as semi-stocks. But we continue to hold the hands during this roller coaster period and think we end up on the other side with a stock that's much higher.
Dan, this is Anna Marie Washer from Flat World. How do you think about kind of the long-term effects of the tariffs and going into an election period anyways? Are these likely to hold for the next 10 years, or are we going to kind of reverse this back and end up where we are now if we kind of change our policies?
That remains the big question. But I think fundamentally, when you look at for names like Apple in the supply chain, they've bet on China. And it's going to be very difficult to kind of undo that web in terms of really what the supply chain is today. So that's why I think many companies, they're taking a strategic approach to it, but I think a cautious approach to making sure that they don't make any major changes, at least until we see how this battle plays out. But that's why right now tech is really caught in the middle of this old Western standoff between the U.S. and China, which has really become a game of high-stakes poker.
Well, at least for the time being, Tim Cook doing everything he can to mitigate those risks in discussions with President Trump, at least on the trade front. But for now, we'll leave it there. Dan Ives, thank you so much for taking the time.
Thanks.